Hi guys, this is CA Balakrishna. In this video, we will be discussing case study number 23, first MCQ. Yeah, first MCQ. What was the maximum amount of remittance that was allowed to Learnadas Private Limited without prior approval of RBI? Basically, in the case study, what happens is this Learnadas Private Limited pays some commission to a real estate agent outside India, and such a real estate agent has helped Learnadas Private Limited to find a buyer for its commercial property in India. Now, the maximum amount of this commission that can be paid to the real estate agent outside India is 5% of the inward remittance regarding sale of such property. In this case, the property was sold for 4.2 crore rupees. Now 5% of such 4.2 crore rupees turns to be 21 lakhs, and in the case study they have given the exchange rate of 70 rupees per US dollar. Now if you convert this 21 lakhs into US dollars, it would turn to be $30,000 or $25,000, whichever is higher. That is the maximum amount that can be paid as the commission to the real estate agent. Now in this case, since 30,000 is the higher amount, maximum of up to US dollars 30,000 can be paid as a commission by Learnadas Private Limited. Thereby option C would be correct answer. Next, which of the following transaction is not prohibited for a non-resident Indian? If you observe, option A, option C, option D, all these three options are prohibited for non-resident, whereas option B, that is subscription to permitted chit fund through banking channel and on non-repatriation basis, is not prohibited. Basically, even investment in this chit fund business is also prohibited, but there are certain exceptions provided to this chit fund business. What are the exceptions? The exceptions are that the amount has to be invested through proper banking channel, and the investment must be through a non-repatriation basis. If those conditions are satisfied, then the non-resident can invest in the chit fund business in India. Thereby option B would be correct answer. Next, the adjudicating authority under the Insolvency and Bankruptcy Code 2016 on the admission of application for corporate insolvency resolution process does not make an order for. Basically, after the adjudicating authority accepts the application for this insolvency resolution process, it passes three orders. What are those three orders? First one is appointment of interim resolution professional. After that, declaration of moratorium period, and after that, causing public announcement for initiation of corporate insolvency resolution process. These three orders will be passed by adjudicating authority after accepting the application, but order for formation of committee of creditors will not be passed by the adjudicating authority. Thereby option D would be the correct answer. Next, whether the property held in the name of Sri Devi by her father be considered as a benami transaction, considering the fact that Sri Devi got aware of the ownership of the property after receipt of notice from the adjudicating authority under the Foreign Exchange Management Act. Basically, in the case study, the father of this Sri Devi purchases a particular property in the name of Sri Devi, who is his daughter, but and the property is also purchased from known sources only, but the daughter Sri Devi is not aware of the fact that the property was in her name. In that case, such transaction will be Binami transaction, and the father of this Miss Sri Devi will be prosecuted under Binami property, Prohibition of Binami Property Transaction Act. Therefore, such property is Binami property. Yes, option A. Next, if the credit period allowed by the exporter, here you have to make a small correction. There is some printing mistake in the question. You have to strike off this exporter and write it down as strike off this importer and write it down as exporter, and even here also you should strike off this importer and write down as exporter. Now let us read the question. If the credit period allowed by the exporter for payment to TFL Private Limited was 3 months, then what was the maximum time limit available with TFL Private Limited as per the provisions of Foreign Exchange Management Act 1999 to make payment to the exporter? Basically, if you import any goods into India, you have to make the payment regarding those goods within a period of 6 months from the date of shipment. Thereby, option B, 6 months would be the correct answer. By this, we have completed MCQs. Now we will be moving to descriptive questions. See, in the lights of provisions of Foreign Exchange Management Act 1999 and its regulations, please examine the validity of the contentions made by Messrs. Sai Enterprises. Basically, what was the case against this Sai Enterprises? It was observed by the adjudicating authority under FEMA that Sai Enterprises has received some foreign exchange without corresponding inward remittance. Okay, if you receive any foreign exchange without corresponding inward remittance, then it will be deemed that such amount is not received through authorized dealer. Thereby, in this case, since Miss Sai Enterprises received the foreign exchange without corresponding inward remittance, it will be deemed that Sai Enterprises has received the foreign exchange not through authorized dealer. Hope that is clear. Next, Mr. Raj. Basically, what happens is, in the case study, Mr. Raj deals in this transferable development rights. Basically, Mr. Raj is a person resident outside India. A person resident outside India cannot deal with TDRs. There is prohibition on dealing with TDRs. Thereby, the contention Mr. Raj contends in the case study that he is resident. Thereby, he can trade in the TDRs. But you observe, this Mr. Raj has went out of India some 5 years ago, and in the last year only he comes to India. In the last year, that means in the previous year, he stays in India for more than 182 days. But his purpose of visiting India is some tour. Okay, his purpose is not either business or employment or any uncertain period. He visits India for tour. Thereby, he will be considered as a person resident outside India only and not PRI. And a person resident outside India cannot trade transferable development rights. Hope this is clear. Next, contention made by Votes LLP. What is the, first of all, what is the offense committed by Votes LLP? Let us see in the case study. Here, Votes LLP. Adjudicating authority has issued notice to the Votes LLP stating that donation of $90,000 made to a reputed institute in the US in the field of activity of donor company without prior approval of RBI as its foreign exchange earnings during the preceding 3 financial years was 75 lakhs. Okay, during preceding financial year, it's a preceding 3 financial years, its foreign exchange earnings were 75 lakhs and it has made a donation of $90,000. Let us see whether such a donation, and regarding that notice, the contention made by Votes LLP is, one second, yeah, see, the contention that Votes LLP has made is that as the donation was less than 50 lakh dollar, there was no requirement to take RBI approval, to support which the donation receipt is also provided. Let us see whether the donation of $90,000 is permitted or not. If you see, the maximum donation that can be given is 1% of the foreign exchange earnings or 50 lakh dollars, whichever is higher. If you observe in the case study, the foreign exchange earnings were 75 lakhs. Now 1% of 75 lakh turns to be 75,000. But in the case study, the Votes LLP has made a donation of 90,000 without taking prior approval of RBI, which is not allowed. Hope this is clear. Thereby, contention made by Votes LLP is not valid. Next, proceedings instituted by adjudicating authority by issue of show cause notice to TFL Private Limited under the provisions of Foreign Exchange Management Act 1999 cannot be prohibited because of going on of corporate insolvency resolution process under the Insolvency and Bankruptcy Code 2016. Please comment on the same. Basically what happens is, against this TFL Private Limited, adjudicating authority under FEMA has issued certain notice prosecuting this TFL Limited, but TFL Limited contends that there is a insolvency resolution that is going on against TFL, and under this insolvency resolution, moratorium, okay, moratorium is implemented. Now during this moratorium, no pending cases will continue. That is, the pending cases will be suspended for certain period, and no new proceedings can be initiated. Thereby, the adjudicating authority under FEMA cannot initiate the proceedings against TFL, since there is insolvency proceedings going on against the TFL, and there is a moratorium period that is applicable on TFL. Thereby, this statement is not correct. Okay, in the statement he says that under the provisions of Foreign Exchange Management Act 1999 cannot be prohibited. Okay, he says the proceedings under FEMA cannot be prohibited due to moratorium. It is not correct. Proceedings under FEMA can be prohibited since there is moratorium. Hope that is clear. Next, what shall be the amount of penalty that could be levied against Lernander Private Limited, and if offence is compounded by the relevant authority, whether the adjudicating authority can take any further action in respect of show cause notice to the Lernander. See, basically if you see, Lernander has given, first of all, let me show you the notice that has been given by the adjudicating authority against Lernander. See, what did it say? Lernander, payment of commission of 23,500 pounds, 1 pound is equal to $1.3, to an agent abroad for sale of commercial property located in Jaipur, for which 4.2 crore were realized. Okay, even the MCQ number 1 is also based on this only. Now let us see whether this payment of 23,500 pounds is allowed or not. Yeah, see, it has made a payment of 23,500 pounds. Now in the case study, the exchange rate given for dollars to pound is 1.3 US dollars. Thereby, if you convert this this pounds into US dollars, it would turn to be 30,550 US dollars. This is the actual commission that has been paid. But what is the maximum amount of commission that can be paid? It is 5% of the value of inward remittance regarding the sale of such property. Now the property has been sold at 4.2 crores. Now 5% of such 4.2 crores turns to be 21 lakh dollars. Now if you convert this 21 lakh rupees into US dollars, it would turn to be 30,000 US dollars. Thereby 5% of inward remittance or $25,000, whichever is higher is the maximum amount of commission that can be paid. In this case, 30,000 is the maximum amount of commission that can be paid, but they have paid $30,550. That means $550 extra has been paid. This is the offense. Now for this offense, maximum penalty that can be levied is 3 times the amount involved in the offense. Thereby the penalty that can be levied is, see, the penalty that can be levied is 550 into 3, that turns to be 1,650 US dollars. Now the second question that he asks is, if the offense is compounded by the relevant authority, whether the adjudicating authority can take any further action. See, once the offense is compounded, then no further action can be taken against the offense which has been compounded. Hope that is clear. Next question. The property owned by Sri Devi was acquired by his father, but Sri Devi was not aware of the ownership of such property. Examine the statement in the light of provisions of Foreign Exchange Management Act 1999 and the provisions of Benami Property Transaction Act. We have already discussed this in the case study. Since Sri Devi is not aware of the fact that there was a property in her name, such property will be treated as a Benami property and such transaction is a Benami transaction. Hope that is clear. Next question. What are the possible actions that can be taken against Mr. Pasha for the offence committed by him under the provisions of Prevention of Money Laundering Act 2002? Basically what happens is, this Mr. Pasha purchases a property in US for 3 lakh US dollars. Okay, for 3 lakh US dollars he purchases a property. Now of this 3 lakh US dollars, $2,50,000 was paid through normal banking channels, and it was found later that $50,000 was paid by this Mr. Pasha out of earnings made through sale of opium. Okay, opium is a drug. Now he made 50,000, the payment of $50,000 out of the amount earned through proceeds of crime. It would be covered under Narcotic Drugs Acts. Okay, Narcotic Drugs Act. Now what is the punishment under Narcotic Drugs Act? The punishment is minimum of 3 years to maximum of 10 years imprisonment along with the penalty. Okay, that is the punishment that can be levied on Mr. Pasha. And also the property can be confiscated. Okay, the property that Mr. Pasha has purchased can be confiscated by the authority. Even such action can also be taken by the authority. Next, BMT Associates in its reply provided the website address of the authority under RERA wherein registration details of project can be obtained. Okay, what is the responsibility of authority under RERA with respect to such a grant of registration? See here, you can answer this question without reading the case study itself. What he is asking is, what is the responsibility of authority under RERA with respect to grant of registration? Once application for registration is received by RERA, within 30 days it has to either accept, that is grant the registration, or reject the registration. If it rejects the registration, then it has to provide reasons for rejection, and also opportunity of being heard must be provided. Okay, these are the responsibilities of RERA authority. And once the registration is granted, it must provide user ID and password to such a person. Okay, this would be responsibility of the authority regarding the registration application submitted by the promoter. Hope this is clear. By this we have completed case study number 23.